have a quick look around the markets. Just in terms of the closing levels, the FTSE up 0.4, Euro Stoxx up similar margin, the DAX up 0.13, CAC 0.4, and so minor gains seen across the cash indices. In the futures market, the DAX actually sitting pretty flat at the moment, having fallen later in the session at around the dip that we saw at the open on Wall Street. When Sam was covering the desk, I know he was talking through, just having a quick look at the Dow. There was a level which he had marked up at 21,944, kind of previous points of significance, some of the support that was seen back in yesterday evening session, and then before, and dating back to the high that was seen briefly on that volatility on the 10th. He said that was also in the cash lined up with the 22,000 level as well. And so the Dow coming under some selling pressure though, despite what was actually better economic data in the US. Now logically you might think, well, why has that happened? But then if you start to think about monetary policy and where we are in the process of the Fed's kind of timeline, then good economic data essentially gives them more credence to go ahead and follow their path of tightening the balance sheet and also delivering their final interest rate hike, all by year end. There was some nervousness about this retail sales report because if you remember last month, retail sales report was weaker than expected and CPI was lower than expected with the inflation readings, both of which you would think would create a very difficult environment for the Fed to continue to remain hawkish going forward. So this would have been welcome relief for some of the Federal Reserve members. This also then gave the dollar a bit of a further shot in the arm late in the session, which did pressure both pairs further on the day. Now, don't get me wrong, the dollar was already stronger for the best part through the Asia session and also the European morning. A couple of things to be aware of there was, again, a little bit of tempering of the situation in the Korean peninsula. There was a local state media, Kim Jong-un, the North Korean government issued a more conciliatory tone in a statement overnight. So slight de-escalation of that situation, just bringing back some continued confidence, which we saw in the market yesterday, where likes of the S&P had, I think, its best day in about 3 months. So some of the dollar strength as well came from the Dudley comments. They were last night. He continued to remain hawkish, talking about another hike seems reasonable for this year. So there was dollar strength in the morning, and that did see both major pairs generally trade lower as the session progressed. Now, just having a look at the pattern here, there was an initial low that was seen at this 117.41.5 level. There was also, you can see here, previously a line of support on some prior occasions in recent trading sessions. A break of that saw a further run to the downside around to the level of the low that was printed on the afternoon of the 9th, before then where we've recovered. One of the questions I had from one of the trainees was that why haven't we continued to move lower here in euro dollar? And I think with the euro currency specifically, you've got to remember that economically Europe's in a fairly healthy state at the moment, and just if we extrapolate out just this retail sales figure, the market is still much more dovishly placed than what the Fed are telling us. So there's a little bit of a divergence here in what's going on at this point, and I would say those dynamics generally would be more beneficial for further upside or support, at least for any concerted selling in euro dollar. So we've kind of went through various technical levels. Maybe participants just found a decent level to just re-enter long positions there, or exit those shorter dated or more short-term strategies on the short play. Cable was quite interesting because obviously the move here has been twice the size of the sell-off in euro dollar, so over 100 pips. Now, dollar strength really defined some of the morning's price action. If I remember, there was a level we were looking at here. If I put it on the 90-minute chart, earlier on in the session was S1, was the first time we had a bit of a a brief pause in the downtick. You can see here that was the low on the 11th in the afternoon, and I think if we go further back to here, which was the middle of July, or the 20th to be more specific, you had this double bottom. That was the first kind of test on the downside, and this came ahead of the data. We eventually managed to break that. We moved down then towards S2, the numbers came out, and as we know now, those CPI numbers in the UK came out at 2.6%. So that was 0.1 weaker than was anticipated, the same, in fact, level as what we had in the prior month. And so any expectations that we are in need of an immediate rate hike in the UK, you would say that argument is becoming less and less kind of potent. Certainly McCafferty and Saunders might find it increasingly hard if inflation levels at this point, or in fact does decrease. They'll probably look to join the majority and not really seeing any policy changes anytime soon. In terms of the reason for the drop, the Office of National Statistics, they said the price of motor fuel continued to fall and provided the largest downward contribution to change in the rate between basically the survey period June to July of 2017. And so then obviously the dollar strength came on the back of the retail sales report. That pushed sterling ever lower. And just having a look where we trade at the moment in the context of the week, I'd say definitely got to keep an eye on the downside to the, really we're looking at the 10th or the 12th of July lows. We'd be looking only around kind of 30 pips or so away from the current price action. Certainly not out of the realms of being tested as we progress through the trading week. Obviously we've got the FOMC as well coming up on Wednesday night, or tomorrow night. So if the Fed do remain persistently hawkish, this could come under some pressure. That level breaks, then probably psychologically the 128 handle would be a logical target. Having a quick look then at the calendar for the rest, or excuse me, this is not the rest of the session. This is first of all for the rest of the session. Just do be aware we have, of course, the API crude oil inventories. They'll be coming out later on this evening. Market participants will be using that as a barometer for how they'll position themselves slightly for the DOEs to come out later on Wednesday afternoon. Now, in terms of oil today specifically, it's not been anywhere near the same as the size of the move that we had in yesterday afternoon. However, it has been generally another negative session, albeit we're off the session low, which was a brief flirt towards $47 here, you can see. We are down though 27 cents at 47.32 at the moment. Again, people still kind of thinking about the weakness in the Chinese data, the EIA's report about for a 9th consecutive month forecast sign for September for US output to have increased once again. We've had Libya's Sharara oil field said to be back operational to the tune of around 260,000 barrels per day. We've also had Libya's Zuatina oil port has resumed its loading operations. So there's certainly a couple of more bearish factors at play, which will probably help explain some of the heavy nature of the price movement of crude oil from a fundamental perspective at least. But looking at the calendar for tomorrow, let's have a quick recap of what's to come. And actually, from a pound point of view, although it's been a hefty loss on the session, pretty much a full point in the FX market for cable, to get a better, broader context of the UK economy, we're definitely going to get that this week. That's because we have tomorrow, as you can see, we get the latest wage data out of the UK. And if you're concerned about inflation and you're concerned about anemic wage growth in the UK as termed by the governor, Mark Carney himself, then certainly these are the types of measurements that he and his colleagues at the MPC will be watching very closely. The unemployment rate and the claimant change rate really are not important. In terms of claims, they're tracking at, I think it's in the UK, the lowest since about the mid-70s, 1970s. So certainly it's not about jobs in the UK at the moment, it's about earnings. And the divergence between the price of goods and people's wage growth has been moving further apart. So this will be important at 9:30. And then later you get the latest GDP readings coming out of the Euro area. Now Germany was a minor miss earlier this morning, but if I remember rightly it was a 0.6%, so still growth in the kind of engine room, if you like, of Europe. and we are expecting quarter-on-quarter growth of exactly that number, 0.6% for Q2 and 2.1 for the year-on-year. Going into the US afternoon, a few other things then to be aware of. You've got the housing data, starts and permits for the month of July. You then get the EIA, so the Department of Energy's crude oil inventory report, which is always market moving. And then we will be seeing the release of the FOMC meeting minutes. That'll be at the latter time of 7 p.m. Okay guys, that's your wrap. So any of those staying in the market for the rest of the US session, I hope you have a good one. Otherwise, if you're signing off for the evening, take care, and I'll see you again for the briefing tomorrow morning. Thank you very much.